What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at SoundHound AI stock, ticker symbol SOUN, on a variety of time frames in anticipation of the next trading day, Monday, March 25th. Alright guys, so SoundHound AI stock here on Friday finished the day down 54 cents a share. That's minus 8.08% in regular trading hours. It did finish after hours down about another 9 cents, but listen, as always in after hours, whether that move is going against you or in your favor, right? We have to look at this unbiased and understand volume after hours is incredibly low. Okay, so always take that after hours move with a grain of salt unless the volume meets or exceeds intraday for whatever reason, typically takes a catalyst. Now let's see what kind of bias we can pull out of SoundHound here from Friday heading into Monday, starting with our daily ritual, the volume profile analysis here on the 5-minute chart. We're trying to find some hidden bias that isn't obvious by simply looking at the price action. By the way, listen, if you're new here and have not done so already, please subscribe to the channel. I greatly appreciate it. My goal is to hit 10,000 by the end of April. I think we can hit that with your guys' help. So appreciate you jumping aboard. And let's circle up the moves here that I primarily want to take a look at. I'm interested in that kind of pop, drop, and recovery off the open. Of course, this larger intraday fade I also want to see, and then we will compare that to the recovery that we saw after the fact. And let's, as always, start from left to right. Very contextual opening bar. If we compare that to, well, what we can actually do is look at this. You can see that opening bar is pretty comparable to past days. Let's go back to the 5-minute here, and we see that we get that fade in volume, which is very normal. However, we did see a little bit of out of context volume on those red bars. We typically see more of a smooth fade. So when we consider that along with the wick on the opening bar, which tells me that that opening bar was a battle candle, which is part of the reason why the volume got pumped up so hard, as well as it simply being the opening bar, right? That's very contextual. That tells me that, if anything, you know, this is not the craziest bias at all that we've seen, even for this weekend's batch of videos. But that opening pop, drop, and recovery from Friday did seem to have a small amount of bearish bias here in the profile. Okay, so that next move that I'm interested in is this intraday fade. Now, we really didn't see much at all in terms of any consistently or consecutively elevated out of context volume bars in the profile here, which is interesting because that fade was, you know, in terms of price action, was a relatively large move from about 6 1/4 or so down to 584. Now, I know that some of you guys are going to look at this, but listen, for me, one volume bar, it's really tough to go and assign bias to that because we're dealing with a big risk of fooled by randomness. I need to see consecutive bars that are out of context, and here, you know, we faded back and then we saw a green bar mixed into the mix on that bottoming candle at the intraday low of 584. On top of that, that attempt at a recovery earlier in the move, we saw that one of the higher volume bars within that particular time frame. So, you know, interestingly, intraday here, bears, you know, I wish I had better news for you, but at least in terms of the volume profile, right, a different layer of the onion, right, we're peeling back, taking a deeper look. There's not a lot of intraday bias in the profile here. Now, we did see on this recovery some consecutive green bars, but again, they weren't out of context. So bulls, again, we have to remain unbiased. There's really not a lot of bias there either. Now, let's take a look, starting with the 30-minute chart. I want to look at the psychological, self-fulfilling prophecy levels that I'm going to be paying attention to come Monday. Now, you can see here that that 50-period moving average, that thing descended at a rather rapid pace on Friday, didn't it? Now, bears, you guys, when you see a further downside move, that's what you would ideally want to see if you're bearish. But understand that that 50-period moving average, right, a very popular moving average, a lot of eyeballs on a popular time frame, that's the quickest moving out of the 6 that we're going to take a look at here today between the 30-minute, 4-hour, and daily charts. So this isn't unexpected to see, but bears, that adds kind of like that one additional psychological barrier back to the upside that you would want to see. But bulls, it opens up the opportunity to reclaim that quickly now that it's closer to the stock price, right? And when you're struggling to reclaim a psychological level like a heavily utilized moving average, and we've been really struggling the last couple of days here, opening up an opportunity to more easily reclaim that, I don't necessarily see that as a bad thing, given that the price action is already what it is. So bulls, ideal scenario on the 30-minute here come Monday is a reclaim of that 50 period, right? And in terms of volume's important in these reclaims. I would ideally like to see the bust up through occur on higher volume, above average volume. If we get a retest at all, I would want to see a retest on lower volume, okay? And then on the confirmation, the bounce above average volume yet again. That shows a big sample size coming in and saying, okay, we agree, we're reclaiming the 50 period here on the 30-minute. At least in the short term. Whereas bears, any retest of that 50 period at all, I don't care what volume it occurs on, but you just want to see a high volume hard rejection and pull back away from that level. Okay, let's move on here to the 4 hour and take a look. You can see that back on Thursday, we actually gave up the 50 period here on the 4 hour chart. And now we currently find ourselves in a rather wide channel on the 4 hour. Right, that 200 period's down at 460 and that 50 period is way up at 760. So the truth is here on the 4 hour, just to save time, I'm paying attention to it. I want to see how the channel itself develops. Bulls, you would obviously ideally want to see that continuing to slowly ascend, whereas bears, you would want the opposite. But a much more contextual thing to look at here is the daily. Okay, because the daily does present a bit of a tighter channel than the 4 hour does. So it's, I think, more contextual to discuss heading into Monday. Now, remember, the daily's not going to show after hours movement. That's okay. You can see the white line and the gray line, the 50-day and the 200-day. Not really relevant right now. They're at $4 and under $3. Okay, not incredibly relevant. But what is relevant is psychological round number levels. Okay. Now look here. Monday's the battle of 6. All right, bulls. Retests of 6, it doesn't have to be perfect, but I want to see us spend as much time as possible during the day above $6 a share. If we do see a retest of it, I want to see hard, high volume bounces. I don't care if we test it 18 times. Hard, high volume bounces away from 6 is ideal. In holding 6, that can set up SoundHound here. Understand that, from 6 to 650 is an 8% move. All right. From 6 to 7 is, of course, a large move. But when you're dealing with a stock that's priced under 10, each 50-cent increment becomes a psychological level. It's not only the whole numbers. So bulls, upon a hold of 6, which is really the goal, remember, Monday's the battle of 6. In that case, then the next area that I'm looking at upside, we could potentially look to use 6 to push back up toward a test of 650, which is that next obvious psychological level. But remember, it's an 8% move to do so. It doesn't, of course, have to occur in one day. But that's kind of that next area that I'm watching in terms of psychological potential resistance upon a hold of 6. Bears, the goal on Monday is to crack downside below 6 on as much volume as possible. And then any retests upside of 6, I don't mind if it tests it on low volume, as long as it rejects on big volume. Again, that's a big sample size coming in and saying, hey, 6 is now a short-term resistance on SoundHound. Bulls, ideally we don't want that to occur. And then very similar to the bulls, bears, a crack downside of 6 can potentially set you guys up to utilize 6 as kind of a ceiling, a rejection point to head downside and test 550 as soon as possible. Now, implied volatility here on SoundHound, currently sitting in about the mid-range. Again, just remember the higher IV goes in comparison to your relevant trade or intended trade time frame more so, the higher the risk of potential IV crush. And the lower IV goes, the more favorable conditions become for new options buyers to step in. All right. Now, in terms of expected moves come Monday, let's take a look at what the options traders are actually telling us. And I actually want to go over this bias as well, but first we should look at the expected move. That, by the way, if you're unfamiliar with expected move, that's a technical term that is derived from the pricing of the options, implied volatility. Basically, it's the expected one standard deviation range of a stock by each expiration date. So if we look here, the next expiration date on SoundHound is March 28th. That's next Thursday. Okay. The expected move by that time is plus or minus $1.08. So if we go ahead and consider that, okay, well, between now and then, there's not really an outsized, perhaps, expectation on any particular day. There's not an earnings event or something. Then essentially what the options traders, right, the chain is pricing in is approximately, if we just kind of dumb that down to divide by 4 trading days between now and then, It's about a plus or minus 27-cent move per day if we look at $1.08 by the end of next week. So if we look at that expected move in kind of a primitive manner and break it down by day, I mean, you can do the math, right, in terms of where the stock currently is, they're basically pricing in a plus or minus 27-cent move. And again, the expected move does not have directional bias, but the reason we just went through all that analysis and we're about to take a look at the options is to look for any potential directional bias and then kind of put that together with what's the options chain pricing in terms of volatility bias or expectation more so. So let's take a look at the actual bias in the chain here. We had 176,400 total contracts traded on Friday. Of those contracts, 107,000 of them were calls with 69,000 puts. Okay, that's a call side bias, but in the 0 to 20 delta range, those short-term speculators, what are the short-term bets being placed? 24,000 calls, 10,600 puts. Listen, guys, if you want to get grandfathered in at the current price for our Roensch Capital Gold server, that's where I'm spending every day I have for the last 3+ years. Sending out my scalp setup alerts, swing trade setup alerts as they come, in-play stock alerts, unusual options activity, and working with my Platinum one-on-one members. You can take a look at that at the link in the pinned comment. That'll allow you to get grandfathered in. And hey, if you got value out of the video, please subscribe on your way out, and I'll see you in the next one.